Taking a look at the FX markets today, I want to focus on the Japanese yen. Of all the majors, the Japanese yen was the biggest mover today, percentage-wise. We're seeing some renewed strength coming back in to some of these currencies now that we're seeing some rotation here taking place amongst the interest rate environment and the equity markets as well. So we're seeing a little bit of a rotation, maybe a bit of a reversal, the short term in some of these currencies as well. The Japanese yen now coming off the lows, and we're seeing the Japanese yen actually up 5 days in a row now, coming off of the lows where we saw it down around the spot 00915 level, and now we're in the middle of that range for the last month and currently trading right around the spot 00925 level. When you look at the Japanese yen, some of the price action, as I mentioned, we're pushing back up now off of these multi-month lows. And when you look at the driving factors today, I think it was really focused on the data points that came out overnight. Certainly some weakness continues to persist in the European zone. We also saw disappointing numbers coming out of China and disappointing numbers coming out of Japan as well. So it is a little interesting that we did see some weaker numbers coming out of Japan, particularly at the GDP numbers, yet we're still seeing the yen maintaining its upward trajectory, and maybe there's a belief that they'll have to try to stimulate the economic structure further moving forward, and maybe that's why we're seeing this, or maybe it's just because, as I focus on interest rates now, that we're seeing interest rates now moderating after the Fed speak today. We did have some Fed speak today, second day of testimony from Chairman Powell, basically indicating that they're going to have rates on hold, at least for the time being. They don't see any reason to change the current policy moving forward. And he also inferred that inflation remains low, and I think that was the thing inside the testimony today that helped buoy the bond market. We saw the bonds rally today for a second straight day and rates coming under pressure, and I think that that was what kind of persisted and pushed its way into the currency markets now that we're seeing some moderation in the bond market coming off those recent highs with the 10-year just below 2%. Now the 10-year yield right around the 1.81% level. So down quite significantly the last couple of days, and I think that reassessment within the interest rate environment is what's helping to prop up some of these currencies and putting some downward pressure on the dollar as we see the Japanese yen now rallying 5 straight days off of the recent lows.